All right, hello and welcome to Camel Finance. I'm your boy Camel, and today I've got with me Sonny, which I'm extremely excited about. So, Sonny, thank you for being here. Question number one, Sonny, how are you doing?
Pleasure to be here, mate. Excited to share my perspective today. Doing really good, thank you.
Good, 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 good. The first thing I want to ask you, Sonny, is do you want to tell us a little bit about your background, perhaps, and how you got into markets and that kind of thing?
Sure. So I used to work at a hedge fund in London, and really that was my introduction into markets. I'd always been interested in how the economic system worked. I was fortunate enough not to go into the indoctrination of any kind of economics degree. So I find myself quite fortunate that I didn't have any like formal training in any economic theory or anything. I went through the path of the legal system. So I was a legal and compliance associate there. So working more back office, but working closely with the CEO about risk management, um, researching a lot of or doing compliance checks on a lot of the research. So by the nature of my role, I was learning how a hedge fund operates. Although I wasn't on the front end of things, I was more back end of things. It really helped me just build a picture of how a hedge fund operates in the world, and yeah, and was dealing with a lot of live issues when there's a crisis. Putting checking our limits and the portfolio limits and our risk limits and communicating those with the CEO. So it was a really cool experience in that sense because it really cut my teeth in how to manage risk, kind of what your levels are, what your mandate is, and understanding how the inner workings of what a hedge fund is. And so essentially during COVID, they decided to start to wind down the business, and that was when my job became essentially redundant. So that was really a message from the universe for me um, to really go my own path. And I always knew that day was going to come eventually, and that COVID was really the push for me to just kind of figure out what I wanted to do. And so I kind of made a vow to myself at that point. I was like, I'm not going to sacrifice who I am anymore for money. I wanna be, you know, free in that sense, not just financially free, but spiritually as well. So I embarked on a bit of a soul searching mission, and through that soul searching mission was educating myself about how markets really work. And then about 2 years ago, I really committed to this path and started trading full time. And there's no real substitute for just watching price action every day. So I just really committed 100% to that, and just tried to build my understanding of how markets work. Because although I worked at a hedge fund, there's a lot of things that you just don't understand until you're actually in markets. Like there's no substitute for experience, and that goes not just in markets but for life too. So yeah, sort of threw myself in the deep end, and you learn to swim a bit faster that way.
Yeah, I know I said it to you off camera, but I've been super impressed by your level of knowledge and attention to detail and your kind of mindset and approach to markets,
Ah,
given
thank you.
that you've only been doing it for a couple of years. I mean, I guess the hedge fund background must have helped a great deal. But if you'd have told me you had 10 plus years in markets, I would have absolutely believed you. So,
Oh, that's very kind. I appreciate that. Yeah, it's I think I just genuinely love it. I think that's so important. I genuinely find it fascinating, and I from the beginning I looked across all assets. Like there's never been like, oh, I'm just into crypto kind of thing. Like I want to understand how the whole market works. Like I'm not in this game to like just buy bull flag breakouts. Like no offense to anyone that does that, that's fine, but I want to understand how this whole system works and the interconnectivity of it. It fascinates me. So that's why I think my approach can be quite unique, because I'm tying many seemingly disparate assets together, and that's really where I feel like I can find my edge. And you can see things develop before the rest of the market does, and that is also a gift and a curse, because sometimes I see things a bit too early and I'm a bit too early to the trade, and I've got to manage my patience a little bit better to just let it unfold. But you know, that, as you know, that comes from experience. You know, that's the thing you can't fake, you know, like that kind of patience that comes from years in the market. And it's something I really respect about you. Like, you kind of just have that ability to sit back and wait for your system to hit, and then the catalyst comes in the news, and there's no surprise from you, you know. And as you will know, that comes from just years in the market.
Yeah, absolutely. I'll say this though. I still suffer. I mean, I've been doing this a decade and a half, and I still suffer from that being early thing. And it's interesting that you bring that up, because it is almost like when you're trying to build a holistic picture and you're trying to look at absolutely everything and take as many factors in to account as you possibly can. It's funny how, yeah, when you mentioned that, I was just like, yeah, that sounds exactly like what I do all the time. I'm always thinking, I'm always thinking things are going to happen almost immediately, and they
Yeah,
always take longer than I actually think they
yeah,
would.
totally.
So yeah, even with a bunch of experience, apparently that's still an issue. But yeah, I guess we can stick to the system and try and figure it out from there. I know you want to talk to us a little bit about FX to set the scene.
Yeah,
So can I pass it over to you and you can tell us?
100%. So this is, before I jump into the dynamics of the yen carry trade, I just want to frame it because it's been confusing a lot of people, and I understand why. Because you have to see from different time frames. So I'm starting here with something everyone's familiar with. Everyone understands this relationship. This is not, you know, this is not complicated, but I just want to break it down to understand why this happens, and also give some context for later on for the yen carry trade. So essentially, as we all know, generally speaking, when the dollar tops out, it usually marks the bottom of, you know, the cycle. So in Bitcoin, in risk on assets, broadly speaking. So um, essentially, what happens is the dollar strength causes risk, is usually associated with risk off movements, generally speaking. And then as the dollar weakens, you get more risk on appetite. And there's probably no better barometer of risk on appetite than Bitcoin. So, and I don't know if people really understand why that happens. You know, we understand that dollar down, good, Bitcoin go up, essentially. But why this happens, so the dollar is a it feeds through into markets. The effects of the dollar feed through into markets on a 3 month lag, because the dollar represents financial conditions and liquidity. So when the dollar is going down, that's showing you that financial conditions are easing and that the liquidity is increasing, but that's not immediate. So that takes, generally speaking, three months to really work through into the system. So that's one time frame we're thinking about. So how I understand FX and why I use FX so much is because FX, in my opinion, is the second most important market globally. You've got, first is the bond market, and second is FX. Our entire system is essentially a it's essentially currency wars. You have currencies which are weaponized in an economic way to leverage power. So with that in mind, what happens when the dollar drops is that all the other nations are given cover to loosen monetary policy. I think that's something that's really important to explain, because when the dollar is strong, countries can't loosen their monetary policy because they'll lose control of their currency. So they're really waiting for the dollar to weaken before they can start to, you know, really loosen their monetary policy, easing by, whether it's via liquidity or cutting interest rates, whatever the tools may be. They simply can't do that when the dollar is strong. So you'll see it almost immediately, and there's really good examples of it over the last 12 months. Last September, as soon as the dollar dropped a lot last September, you saw the Chinese release their QE bazooka, and they've done the same thing in Q1 this year. So Just wanted to give that context around why this cycle plays out and how important it is to understand these push and pulls in FX, because it can really help us not only navigate the cycle more broadly, but you can, as I'm going to talk about, you can use something like the currency pair between the yen and the dollar to really time your trades so that you're working with the flows. So I want to be building a long position when the flows support a risk on appetite. I don't want to be building that long position in the middle of the yen carry trade unwinding. I'm going to get absolutely wrecked. So that's why I'm trying to explain this context, because it can help us a lot with positioning.
Okay, so we want dollar weakness or dollar strength if we're going to set up bullish market conditions.
So this is where it gets a little bit confusing, right? On the higher time frame, let's talk about monthly, quarterly. You want dollar weakness for risk assets to have a long bias on risk assets. But as I'm going to show, it's not that simple, because it doesn't move in a one-to-one relationship, and that's been very obvious recently. I think Jordan Lindsay put out a good tweet a couple of days ago, and he was observing that same fact. He was like, if you'd have told me the dollar would collapse in Q1 and Q2 and of this year, and Bitcoin sitting at 0% as flat, like obviously it's not a one-to-one relationship, right? So what's really happening, and that's where I think understanding what's happening between the yen and the dollar is so important.
Yeah, you know the other thing I think has been weird this time around. I say this time around, I'll define that as from the bottom of the 2022 bear market, and that's that gold has been rallying with everything else. So it's
Mhm.
definitely a complex time. Do you,
Exactly, and that ties into what's happening with the yen, and I think that gives us a little tell as to what's really happening under the surface. And one of the main reasons I wanted to share this idea is because for yourself and your followers, obviously I follow your channel closely, so I understand what your focus is within markets as well. It's really going to help you position in gold. It's really going to help you with your gold trades. It's really going to help you with your Bitcoin miners by understanding this yen carry trade. So that's what I'm here today to kind of express.
I'm looking forward to it because, to be honest, Sonny, a lot of people ask me to cover the yen carry trade, but I think I'm number one, I'm not really qualified because I haven't spent that much time looking into it. But number two, I'm more than happy to say if I know something, I'll tell you, right? But if I don't know, I'm more than happy to sit back and say I don't have the answer for you. So
Yeah.
the truth is, for a long time, people have been asking me, can I cover the yen carry trade unwind? And
Okay. Interesting.
yeah, and to be honest, I just kind of stay in my lane. I'm like, that's not my bag, but I know it is your bag, so I'm really excited to have you walk us through this. So if you could set that up, I would love to see it.
Awesome. Yeah, I just changed my screen. Okay, so I started my Substack last week, and a big motivation for that was to provide some education around this topic, because it's not spoken about at all. It's interesting. There's no one really picking up on it. People are picking up on the fact that this correlation is off between the dollar and risk, and what's gold doing. People were kind of pulling on threads, but they're not actually seeing how the thread is woven between all the assets. So I'm just going to walk through my publication, which is free. Everyone can find that on my profile. So if they do want to look at it in more detail. And there's also a big thread I'd done on Japan a few weeks ago that kind of puts the context around this. So this tweet I've got in front of you is really how I'm understanding this dynamic that's happening right now. So as I said, with the background of the dollar is dropping, liquidity is going up, especially the Chinese. Chinese are a big driver of liquidity right now because they're in a very dire situation with deflation. So this tweet was how I kind of was the analogy and the summary that I gave for my thesis of what is happening right now. So I'll just read it quickly. So this is like a game of musical chairs. Chinese liquidity is the music. The Japanese yen versus the dollar are the chairs. And each time the music stops, investors scramble for a chair. But each time that there's an impulse higher on the yen versus the dollar, a chair is removed. So eventually there won't be enough chairs to go around when the music stops. So what I mean by that is that we are in a markets are at a moment where there's peak liquidity. There's the dollars dropping, Chinese are stimulating heavy along with Europe. You don't necessarily need the Fed and the Treasury in the US for the liquidity effect. It's a global phenomenon. So now the dollar is dropping. They've got cover to increase liquidity, but you've got this very unique dynamic going on in the background, which is that every time the yen increases and has an impulse, it trends higher versus the dollar, you have a deleveraging effect. That's what I've realized over the last 12 months watching this. And I've got to watch it twice now with August 2024 and April 2025, when the two main crises that happened in the market, they were that no one scrambled to buy dollars. The dollar collapsed. Think about how crazy that is. In the two main crises, the crises we've had in 12 months, the dollar collapsed and it was the yen that was spiking. So why is that happening? That's completely counterintuitive to what you would expect. You would expect everyone to flock to the dollar. That's usually the safe haven asset. So that's telling me that those two events were deleveraging events. And what essentially happened, to understand that dynamic, you got a massive short squeeze on the USD JPY pairing because everyone was so short on the yen and so long USD assets that you got a massive short squeeze on that, and they were forced to buy the yen to cover their loans, and they were forced to sell USD assets to raise the funds to pay back the loans in yen. So this is really how I understand markets, and this is why it's so toxic to reduce interest rates to near zero, because this policy that the Japanese have had has created this arbitrage opportunity where institutions are incentivized to borrow yen at ridiculously cheap rates so that they can recycle that money into markets, and that's what the yen carry trade is. So I'll just explain that a bit more detail so that we're all following from the beginning of what the yen carry trade is. So you essentially have Japan, which has historically had very low rates for low interest rates for a very long time now, because they're implementing yield curve control. They're capping their bond yields at the expense of their currency. That's why you saw the currency collapse versus the dollar, because they're essentially printing yen to buy back their own bonds. They're monetizing the debt, which is incredibly toxic. That's not a healthy functioning economy, in my opinion. So there's massive ramifications to that, because now global institutions are going to see that arbitrage opportunity. They know they can borrow yen at very cheap rates, and maybe they want to reinvest that in US treasuries because obviously there's a high yield, or maybe they want to reinvest that in the Magnificent Seven, which I think is probably the most concentrated trade in the market for a reason. I suspect, for reasons we'll talk about, that really the Mag 7 is probably where a lot of that money gets funneled into. So it creates this massive distortion in capital markets, because that's not natural. And institutions are always going to be incentivized to take advantage of that. So what happens with the unwind? So you've got institutions that have taken money from the yen, borrowed money in yen to buy USD assets. So essentially, they're short the yen and they're long the dollar. That's essentially what the trade is, and they're capturing the spread between that. So what happens when the yen increases and strengthens versus the dollar? You have this effect where suddenly their borrowing costs go up, and suddenly the trade is not as profitable as it was, because the yen is now increasing in value. So a lot of the times that causes them to close the trade. But what happens is, if you get really strong volatility, like what we saw in April, you get a dynamic where they get squeezed, and it's like a self-fulfilling prophecy because they have to sell the USD assets to buy yen to pay the loan, but that process of selling the dollars to buy the yen, that makes the yen even stronger. So it's like this really vicious cycle where once the unwind starts, it starts feeding in on itself because they're forced buyers of the yen, and that just exacerbates the unwind, and that can get really, really powerful. And that's what we saw in April and August. You saw this massive snowballing effect as the yen spikes because they have to buy yen to repay the loans, and that's making the yen even stronger. And it's just a really powerful short squeeze. Essentially, that's the way I think of it. It's a massive short squeeze on the USD JPY currency pair. So this is how that dynamic unfolds, and and I eventually think that's going to cause immense problems. But we'll get to that. So just to illustrate this relationship between the Japanese yen and the NASDAQ, here you can see very clearly the inverse relationship between the NASDAQ and the JPY USD. So you can see how I've highlighted these inflection points in markets, and you've got a bottom here. And in the you got bottom here in the JPY USD. So this is why I wanted to frame the dollar cycle at the beginning, because this is what I'm showing you here is counter to what I showed you at the beginning, which is that the dollar going down is good for risk assets. This is showing the complete opposite. But that's why I wanted to explain about time frames, because you can see here the NASDAQ is moving with the dollar very clearly. So as the dollar strengthens, so does the Nasdaq. And then once the yen starts to come roaring back, and you can see this is in Q3 last year. These moves are very powerful FX moves. It's not particularly normal for a currency pair to move with that trajectory in such a short space of time. So that kind of shows you what I'm talking about this self-fulfilling prophecy that happens with the unwind. And you can see very clearly once that climax is there, you get your first higher low in the NASDAQ, and you get this bottoming process. So I don't think people have really cottoned on to what's happening here, but I think this is a beautiful chart because it just paints a really clean picture.
Yeah, for sure. So I guess the next question would be, what happens from here? Like, what happens going forward?
Yeah, so I will just explain very quickly about how I'm understanding this dynamic and why it's causing this deleveraging effect. So we also had last August where the Japanese done a surprise rate cut. That was essentially what caused this crisis in August last year, was because they just suddenly increased rates when no one was expecting that. And you can see it really clearly here. The yen spikes. You get a risk off movement in the US 2-year. The Nikkei collapses, and then you've got the Mag 7, which really plummets as well here. So we saw something very similar this April. This is an old chart from April when I posted this analysis. And so something I also want to explain here, which which is really mind blowing, because people think that like altcoin meme traders are the biggest degenerates in the financial world. That is not true. People do not understand how institutions work. What's crazy about this, Camel, is that when they get blown up, when these institutions get blown up in these trades, they go back for more, and not just dip their toe in the water. They'll put the trade back on afterwards, but with increased leverage to get the same spread as they had before. Like, just stop and think about how crazy that is. Like that's like a meme trader revenge trading. That's literally what institutions do, and people don't think of institutions this way. They're smart money. No, they're the biggest degenerates of all of us. And because of that, I started to see, because I understood that dynamic back in August, I said, I done a whole tweet, whole thread about how what you're probably going to see in markets, this was back in September, is a situation where the JPY USD starts a bull trend and ratchets up alongside the VIX. So you're going to get a bull trend in the VIX and the currency pairing, whilst also the market goes up, which is so weird to say that because that's not what anyone would expect. How can the VIX go up and the market go up at the same time? That doesn't really make sense. But that speaks to the the volatility that is getting ever more increasing because they're putting the trade back on and the leverage in the market has increased. It's not going down. That's the beauty of these deleveraging events is that it flushes the market. You see it all the time in crypto with the open interest. So it's good, it's healthy. But then they put the trade back on, and this is why I want to show this chart because see this anomaly here. This is this is how you know what they're doing. They're putting the trade back on. They're basically they're gambling here when the yen goes up. They're gambling that the yen's going to roll over and we're going to go back to the yen being extremely weak versus the dollar. But then the yen bottoms out here. It doesn't roll over like it's done for the last 3 years. And once the yen starts bottoming here, you can see the very clear effect it's having on the market. And once the yen starts making higher highs over here, that's when real problems in the Magnificent Seven start. So this anomaly clearly shows what I'm speaking about. They think they're safe to put the trade back on with increased leverage, but they're not safe. Far from it. It created an even worse deleveraging event. And I would actually argue that what we saw in April was not necessarily a crisis from the tariffs. Don't get me wrong, the whole Liberation Day nonsense caused chaos. But what really happened was the tariff policy induced FX volatility, which blew out all of the spreads on these trades. That's why you also saw the basis trade blow up in the bond market. Was the reason that happened was the volatility. It wasn't any particular macro situation. It was this is how these institutions operate. They with the basis trade, it was a perfect example. It's 100x leverage, because the trade doesn't work without 100x leverage. So they get completely blown up once the volatility starts increasing. So Trump really caused all of this, not necessarily directly through the tariffs, but more through creating this immense FX volatility, and that unwinds all the leverage.
Is this short-term bullish or short-term bearish?
It's both. So this is where it gets really, really interesting. It's so and I said this in my publication at the end. I'm like, I'm extremely bullish, but I'm also extremely bearish, and this is very difficult for people to understand. It's very difficult for people to hold two opposing ideas in their mind at the same time. But that's where I'm at. It's if you understand what time frame you're looking on, it's extremely bullish and it's extremely bearish at the same time. So, but you've got to understand what part of the market it's affecting. So I think you really appreciate this chart, which is tying into gold now, because this correlation paints a very clear picture for me of the yen has become a risk-off instrument. It's moving with gold, and gold tends to spike. In these deleveraging events, there's a flock to people flock to gold. So for me, this was fascinating that once I saw this chart, I was like, this is giving me even more confidence in this thesis that the yen is really is causing risk off movements within the market, and that's why you're seeing it correlate to gold. And this is not for me. This is not just an intellectual exercise. So this is a chart from Friday, and you can use these divergences to understand the which you can see at this point on Friday, we had this spike up in the dollar, sorry, in gold. And if you're just looking at the gold chart, this looks like a great breakout, right? Like you've got this trend line here, gold's broken out. Okay, there's Middle Eastern tensions, they're escalating. Let's go. Like if you're just looking at the gold chart, it looks pretty good, right? Like I would have said that, and I think most people would have said that on Friday. Gold's trying to break out here, but it wasn't supported by the yen. So I love these divergences because the yen was starting to roll over actually, and the dollar was starting to put a bottom in. So I was positing last week that I think this is probably an isolated move for the dollar for gold, and we're probably going to see the weakness start forming this week, and that's exactly what we've seen. The gold started to roll over this week, and we started to see strength in the dollar again as the fears around Middle Eastern tensions was kind of alleviated a little bit. But really, I think the yen is driving the whole market. So this is why I want to explain this, because I really do believe this carry trade is driving the entire market. And if you can get a read on the price action, you're going to know when to position risk on, risk off. So I was saying last week that the yen's looking weak here. I think we're going to come in and we're probably going to form some kind of double bottom before it starts another risk off move. So and it's been really lovely actually, because I've been seeing this for a few weeks and now it's actually playing out. It's been really nice this week to finally get that confirmation that the yen is actually breaking down here.
Sonny, do you think this yen? You're saying the yen might move lower. Do you think that's a consequence of yen strength or dollar weakness or both?
The way I'm understanding it right now is that what I've been speculating is the reason for this dollar strength, and I'm talking about short term. We're talking about a move to 102.5. So it's not, it's a reasonable move, but it's not a trend. It's a counter trend move. The reason I think that's coming is because of the trade deals. So I think that's going to support the dollar in the short term, but um, I I don't think you can stop this train of the yen strength versus the dollar because it was so suppressed, because it was so depressed for so long due to these artificial monetary policy tactics. I think it's like holding a beach ball underwater. You're gonna have to let the yen run because it's at such a it just got suppressed for so long. So I think this move is going to be very vicious. I think we're in the very early innings of this move. And what I'm suggesting here is that you will see risk on movements when the yen dollar pairing is going sideways. So you'll get these volatility spikes and you'll get these big risk off moves when the yen is trending against the dollar, as we've already seen in April. That's exactly what we saw here. You can see very clearly how in April the yen and gold spiked here together as the market was bottoming. And you're going to get this very weird dynamic where we have these very sharp risk off moves, and then once the coast is clear and dust has settled and the yen's calming down, that's when you're going to see Bitcoin have really big moves, and altcoins and Bitcoin miners, because the system is full of liquidity. So the way I understand it is like you've got these deleveraging events caused by the yen, and then when the yen recedes and calms down, you get the easing of that deleveraging, and then that effect allows all the liquidity to permeate the system and find a home in risk assets. So there's this really kind of unique push and pull in the markets where we're going between risk on and risk off in a really volatile way. And one week you could be really risk off, and then 2 weeks later you could be really risk on. It's kind of like a bipolar market.
Yeah, and we can see that for sure, right? Like the snapbacks when they've occurred. I mean, that tariff tantrum was like 20%. Officially it's a bear market, right, for the
Yeah,
stocks, and it happened
wild.
all inside of what, like I don't know, 10 or 12 weeks, top to bottom,
It's
maybe.
insane. It really is getting insane, the volatility. I mean, I was just thinking something similar on a shorter term on Thursday. There was a bank holiday on Thursday, and you had the NASDAQ dropped 1% on a bank holiday. And the small caps, the IWM dropped 1.5% on a bank holiday. Like what world are we living in where that is normal? Like it's a bank holiday and the futures are dropping 1%. Like usually you get those 1% moves in a day, and that's like a big move. And now it's like something that happens on a bank holiday. I mean, it's complete madness, but that's what's happening. You're getting, and this for me is a signature of where we are in the cycle. We are in the middle of the blow off top. So this is a signature of that because the volatility goes in both directions, and this is why I want to communicate this, because I think understanding this is so important. Because yes, the amount of money you can make in this final blow off top part of the cycle is, you can make the most money at this point in the cycle, but it's also, you forget, it's also the most dangerous. This is where you can also lose the most amount of money because the volatility is vicious, as you say.
Yeah, for sure. And if you're leveraged, especially, then that's happy days on the way up, but it's going to mean that you're not going to be able to sit through the pullbacks, right, on the way up.
Exactly. Exactly, and that's why I wanted to put this trade together, because you can model a trading strategy around this knowledge, and I can use that volatility to my advantage if I know the dynamics that are driving it. So if we move on, this was what I was positing last. This is from last week, last Friday, where this divergence was starting to form on the dollar. And again, this is counterintuitive, right? Like my thesis for the last few weeks has been, hey, the dollar's going to go up and that's going to cause a risk on move for Bitcoin. Bitcoin's going to move up with the dollar. The NASDAQ is going to move up with the dollar. And, I've received quite a bit of backlash for that because I don't think people really understand this dynamic. And I've seen this move coming for several weeks now. It just took a little bit longer to play out. So we had this nice expanded flat in the dollar. And this trend line, by the way, this is a huge trend line. This is the macro channel of the whole trend that's been building over the last 5 to 10 years. So this is a huge level. I knew once it's starting to get a divergence here into this level, we're probably going to see a strong reaction. You've got record amount shorts on the dollar. Everyone thinks the dollar is going to zero. So I really like this idea of squeezing the shorts, and getting this risk on move that I'm looking for. And I expect it to be very vicious. Like my target, I've been getting insulted a lot for my targets on Bitcoin, but I don't think people understand what market we're in. We're in a very vicious market where the volatility is not getting lower; it's getting ratcheted higher for this dynamic that I'm speaking about. So you can expect this really strong reaction here in the dollar, and we've already had the subwave 1 and 2. So now I'm just looking for this real breakout to come probably next week, setting up nicely for next week. Wouldn't be surprised to see some positive trade deals over the weekend to really give us that news catalyst for what we're already seeing in the price action structure. And yeah, I don't think anyone's really expecting the dollar to have a really big move up alongside Bitcoin. That it sounds very counterintuitive, but that's why I wanted to frame it at the beginning. We have to understand things on different time frames because this yen trade is working on lower time frames.
The other thing that supports this is the weekly cycle is still absent for the dollar. And
Okay.
I've been tracking this on my channel for a while. And I keep saying it reminds me of Bitcoin. So Bitcoin's prior weekly cycle, when we went down to about 74K, it took a little longer than anticipated, and a lot of people were getting frustrated and blah blah blah. But I kept saying, like, look, it's not confirmed. There's no signature of a weekly cycle. It's not confirmed by any metric. There's no real catalyst or sign, and none of the hallmarks are present. And
Okay.
and then that ultimately resolved to Bitcoin finding a low, breaking out of the trend line, confirming on all the indicators. And then finally I was able to say, okay, there you go. There's the weekly cycle. But we've got that exact same situation for the Dixie right now. The Dixie should have formed a weekly cycle low a number of weeks ago, and it's overdue. It's long overdue. And so when I look at this current chart, especially with the double bottom, and you projecting this big strong move, that big strong move has been absent until now. And for me, that's what we're missing. We need to see that so that we can label that ultimate low that you've got as your wave one, is it?
Yeah.
Yeah. So we need that big strong push for me to say, okay, there's the weekly cycle. It's finally confirmed. And it's interesting that you say you're kind of expecting this to happen quickly and be volatile, because the rules of cycle theory state that when the cycles overextend, like the Dixie is now, is overdue for a low, then we can expect the move off of that low once it eventually confirms to be very vicious, to be very fast
Interesting.
and a lot more rapid. So there's definitely confluence there with what you're saying, and from my cycle perspective, like I say, I've been looking for a weekly cycle and it just isn't here yet. But if we are going to get a big strong push out of here, big weekly swing low pattern on the weekly time frame, then all of this kind of makes a lot of sense to me.
Interesting. I didn't know that. Okay, so that delay kind of means that yeah, you get a much stronger reaction essentially in the other direction. That's
Yeah,
interesting.
we saw it in. I tell you, the best example that I know of is that the 4 year cycle low was late prior to the C19 meltdown. And
Okay.
so for ages, I was thinking, where's the cycle low? Where's the cycle low? And we just keep going up. We just keep going up. And then all of a sudden, we get the pandemic, right? And the pandemic causes a massive spill. And from the top to the low takes something like 10 or 12 weeks. And then that's how we forced the 4 year cycle low. And it was very vicious. It was very violent to the downside. Of course, we had a big narrative, which is the world is in a pandemic. Everyone's getting locked down, right? But from a cycle perspective, we could see that coming because the 4 year cycle low was late. And so the later it goes, the more violent that snapback tends to be. And I believe that's what we've got going on, but obviously to the upside this time around with the Dixie.
Okay. Interesting. Okay, I didn't know that. Yeah, that fits perfectly with what I'm seeing, and especially given the short interest, I forget the exact numbers, but the levels of shorts on the Dixie right now is at quite high levels. So I really like the odds of getting a nice short squeeze. Probably next week. It's built that bottom. It's built that structure now, and yeah, I'm expecting a really strong move up in the dollar now next week after forming that what looks to be a bottom.
Did you say that you expect this to correlate to higher Bitcoin prices, like a risk on move as well?
Yeah, exactly. So this is what's been confusing a lot of people is my idea that the on the low time frame risk on moves will happen with the dollar. So if I just go back here quickly with the dollar, like just go back on your charts and whether it's the Nasdaq or Bitcoin, what happened in this A wave from the bottom here, middle of April to middle of May. You go back and look at your charts. This high of the A wave marked the top on risk assets. Like it's as clear as clear as it can be, really. So considering this is an A wave, which is nowhere near as powerful as a C wave, I'm expecting a very, very strong move here up in Bitcoin to break all-time high, and across the Nasdaq. Nasdaq looks like, as we'll see, the Nasdaq looks like it's setting up for its fifth wave. So yeah, It sounds kind of counterintuitive, but on the low time frame, you're gonna see risk on assets move with the dollar, counter to what we're conditioned to believe.
Yeah, you make a very good point though, because I've received quite a lot of pushback for this, for being, for a long time I was bullish on the dollar and bullish on risk and bullish on Bitcoin, and my comments a lot of the time were saying things like, "Oh, how can you say Bitcoin's going up and the dollar's going up?" But
Right.
you make a really good point. Like if you just overlay one chart over the other, you can see that, for the most part they move inversely. But of late, particularly this cycle, there's been extended periods of time where they've both moved in the exact same direction.
Absolutely, absolutely, yeah, and that's showing you that the driving force is this yen carry trade. It's so clear to me now, and it's just quite a nuanced thing to explain because of, like I say, because of this conditioning we have with the Dixie and how risk assets move, blah 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 blah. It's quite a nuanced thing that you have to hold two different ideas, opposing ideas in your mind. You have to look on two different time frames. And, I think you tweeted me last week, like, most people can't do that. And that's no disrespect to most people. Most people are not traders. But this is how us as traders think about the world. We have to hold opposing ideas in our mind because we don't know what's going to happen. Obviously, I have a bias. That's how I trade, but we don't know what's going to happen. So it's really important to be able to hold these supposedly contrasting ideas in our mind, but everyone on X wants to oversimplify and be like, oh, yeah, this causes this, and this is a very gross oversimplification. But as I'm demonstrating, the market dynamics are far from simple. Like this is quite a complicated thing to wrap your head around. But once you see it, you can't unsee it.
Yeah, for sure. And I often say that I think a lot of people in this space seek certainty in an inherently uncertain environment.
Yeah.
And so if you're one of these accounts that says, this will happen, then a lot of people are like, finally, someone that knows what they're talking about, right? But like you say, the reality is this stuff is a lot more complicated than meets the eye.
Absolutely. And that's why I try and present so many different perspectives of the same thing to give me confidence that what I'm seeing is correct. So that's what I tried to do in my publication here. And for example, just supporting this move in the Dixie with you. For people that don't know, the Japanese yen comprises about 13% of the DXY, the dollar index. So it's a reasonable portion of the DXY, with the euro being the heaviest component. So I'm trying to like paint a picture by looking at many different perspectives. And here you can see I've got the same setup for the yen. This is posted last Friday, and I'm looking for this same C wave here into this weekly swing high close. This is a huge level, so this is what I'm looking for as a retest before the resumption of the bigger trend. And it's worked out lovely. We've had a nice higher high here this week. It's nice confirmation of a breakout, break above this white trend line, and that's going to move very fast. So again, I expect risk on assets to follow this trend with the dollar, contrary to popular opinion.
So what chart is this right now?
That
NASDAQ.
was
No,
this
sorry.
one is this is the dollar versus the yen.
No, sorry. I meant the next one. That's the
The
NASDAQ,
next
right?
one.
Yeah.
Yeah, this is the Nasdaq. So just tying this in with the risk on movements, as we saw at the beginning of the slides. This is correlated with the dollar. So you can expect as the dollar moves up, so will the Nasdaq, and that makes sense, right? Like you can't have a risk on move when there is systemic deleveraging. Like if there is systemic deleveraging in the market, it's just simple demand, buy and demand. Like you can't have Nasdaq go up, you can't have Bitcoin go up. There's deleveraging happening, and that's what's happening with yen strength. So it makes perfect sense to me why on a low time frame they would move with the dollar, and that's exactly what you're seeing here. This is my low time frame count for the Nasdaq. This wave four has taken much longer than I thought it would to play out, but it looks like a kind of vertical accumulation, which is representative here of this hidden bullish divergence. So you've got the price making a higher low as the RSI makes a lower low. That's usually indicative of a hidden bullish divergence, which is very common for the wave four. And that's usually what creates, in my experience, that's what creates the regular bearish divergence. As you put that top in on the 5 here, that's when you'll probably start to see the bigger bearish divergence form. So I was suggesting last week that you're probably going to see strength this week in the Nasdaq, and we're green on the week, so that's looking good.
Yeah, I think from a cycle perspective, I've been talking about this week how we probably need to find a half cycle low either today or maybe Monday, Tuesday at the latest. And then from there, the bottom should be in. From a cycle perspective, at least in the short term. So from there, it should be up only, I think.
Yeah, it's good. I agree. It's and if we're following this thread with the dollar, as you say, putting in that weekly bottom, we could get a really strong move, which is supported by this count on the Nasdaq. Wave five is typically, not necessarily the strongest move, but the fastest move. It's usually the most aggressive move. So I expect next week we'll see a very, very strong move up in the Nasdaq, and as you'll see here, we can also see the same thing in the Nikkei. So this is the Nikkei, the Japanese stock market, and this is a really clean chart. I really like this chart, especially is slight variation to the Nasdaq in that you've got this triangle forming here, which is a very powerful pattern when you get this compression of volatility. That's why I included the Bollinger Bands here on the daily time frame, because this is really setting up for expansion, and this is what I'm looking for over. We've already made that higher high, so it's looking productive. But I think probably won't be until next week we really see it push for this breakout.
So, how many more slides have you got, Sonny?
Like three, I think, three or
Okay,
four.
I'll pop in here to ask you: are you familiar with David Hunter's targets with the 8,000 S&P, that kind of thing? And if you are familiar, do you give much weight? Do you think it's possible? I'd love to ask your opinion on that.
That's a great question, and it's something that I wanted to express. I think very important. So my and maybe I'm wrong, maybe I'm misinterpreting things, but my idea is that talking about the Nasdaq and the S&P 500, they're heavy, they're overweight mega cap tech. They're overweight the magnificent seven. So with what I'm explaining with the deleveraging of the yen carry trade, that's going to continue. This is far from over. So I believe it's going to be very, very difficult for the Nasdaq and the S&P 500 to make meaningful highs. I do think it will take out the highs. I do think it will put in an all-time high, but targets like 8,000, I think it's going to be very difficult to reach those kind of targets unless the breadth is very good. Because what we're probably going to see as people start to realize what's happening, you're going to get a massive deleveraging in magnificent, I can't even say that word. Magnificent, there we go. I speak Spanish so much now, I think I forgot to speak English. Um, yeah, I think what you're going to get is this dynamic where you get this deleveraging in the Mag 7, and the breadth is going to push through, but you're going to see rotation out of Nasdaq and into IWM small caps, into the more equal weight indices. So I think 8,000's very ambitious. I don't support that. I'm probably more in. I think 7,000. You're probably going to be limited because you're I don't know if you're following what I'm saying, but like you're kind of handicapped. How can you push higher and without the Mag 7 there's this weight, there's this cloud above them, there's this weight on their shoulders that's this deleveraging. The only way you can get to those higher numbers is if you get a big rotation out of that concentrated trade within the Mag 7, and that goes into the smaller cap names. But that's going to push up IWM. That's not going to necessarily be enough force to drive up the Nasdaq and the S&P, given their overweight the mega cap tech. I'm not sure if that makes sense.
No, that absolutely makes sense, and I agree. I agree wholeheartedly, to be honest. So I've been quite vocal that I don't think we can hit 8,000. I think 6,800 would be super good, to be honest. The other thing that's weird, I can see the rotation into Russell 2K. In fact, I did a bunch of dip buy-in during the tariff tantrum, and one of the things I added was the Russell 2K ETF. Excuse me. But the weird thing about tops is usually as we go into big tops, breadth narrows. It doesn't widen, right? If you look at historical tops, we usually see narrowing into tops. So maybe this time is different. I know David Hunter thinks it's going to be different.
What makes you say that the breadth narrows?
If you look at historical tops, breadth narrows into the tops, right? So you see like the breadth is very thin as we approach the tops, and then the big dogs get shot first, right? No, excuse me, the other way around. They shoot the small dogs get shot first, and then which basically means that as we approach the blow off top, people are dumping the penny stocks and they're holding on to the Mag 7 type stuff, right? And that continues to proliferate up into the top, and then eventually the thing that ultimately tops the market is people go, oh well, I've dumped all my small caps, I dumped all my mid caps. All that's left is the Mag 7 type deals. And then they eventually sell those. And that's what tops the market. So historically speaking, like I said, breadth usually narrows into the tops. It doesn't widen. So I think the call for David to see that not only are we going to 8K S&P, but that breadth is going to widen is highly unusual. And I mean, he's got a pretty good track record. I know a lot of people have a problem with him because I don't think they follow his work closely enough. But yeah, I think it will be weird. I don't know what you think about this, but I want to
I
ask
see
you.
it slightly differently, yeah.
Please let me know how you see it. Number one, and number two, can you tell me what you think about the whole Russell 2K small caps being correlated to altcoins? Is that correlation equals causation in that case, or do you think it's just been something we've observed in prior cycles, but it's not necessarily related?
Yeah, it's a really great question, and it ties in very nicely because I'll use the crypto analogy to help kind of explain how I understand market tops. So the way I understand it is that leaders lead. You have, from an Elliott wave perspective, what we've seen is a complete macro wave 1, 2, 3, 4, 5 for the Mag 7. They have topped and they're putting in now what looks to be like their B wave. So how I understand it, it's very similar to what happens in crypto in that you get that first correction in the leaders, and then they get that B wave, which tries to break the highs. Maybe it will marginally break the highs, or maybe it will marginally miss and form a lower high. And that B wave is where the small caps run because that's the rotation play, is how I understand it. Because we're at that part in the cycle where yields are going to drop, there's going to be more risk on appetite, and they're the laggards. So you get this big rotation out of things like Apple and into things like IWM because the leaders are exhausted, and you can, and that's how I'm understanding it, and that's representative in crypto as well. Same dynamic happens, right? We all talk about Bitcoin being the leader, and the altcoins run once Bitcoin gets exhausted, and you get that capital rotation once Bitcoin starts to slow down. So that's how I understand it. Is essentially you're looking at the Nasdaq as the leaders, and then you're looking at IWM, which are the laggards, and you can use that analogy for Bitcoin and altcoins. So I think it makes perfect sense, and I've done a number of threads on the relationship between IWM and Ethereum and the altcoins, and it holds up to me because they're both on the same in the same category on the risk curve. So as risk on sentiment improves, you get allocation of capital further out on the risk curve. And that's what I think we're seeing here, but we're in the quite early innings of it because the IWM is not outperforming the Nasdaq yet. I was suggesting that was going to start to happen in April, and it did for a little while, but then the Nasdaq has been surprisingly strong, and I think people don't understand what part of the cycle we're in because the play right now is not the leaders. The cycle is coming to an end. This is not, this is late cycle behavior. The leaders are exhausted. The play now is the capital rotation that happens from the leaders into the likes of IWN, into the likes of the Ethereums of the world, or altcoins, even if it is just for a brief period. I'm not saying this is, I'm not building my long-term portfolio on this idea. It's a very short-term trade. We're talking we're talking 1 quarter, we're talking 3 to 6 months max. So you just want, in my mind, you just want to play this rotational trade as the yields come down, and as things get more volatile and more risk on.
I mean, to me, this is almost like a new evolution for markets because so first of all, let me back this up a bit. I completely agree with you when we look at the crypto market, right? Bitcoin historically, it runs into a top, it consolidates late in the cycle, and we see that rotation into the more speculative altcoins, right?
Yeah.
Like that's 100% fact. That's just something we've objectively observed. But and it makes sense if what we're going to say now, like you say, is we're going to run into the top with the Mag 7. People are going to rotate Mag 7 profits into the small caps, right? But historically, that is not what we've observed. Historically, what we observe is the small caps run up to heights that are ridiculous, right? Like the 2008 dot-com bubble, we had pets.com. This is like the best example that I know of. It didn't have a single pet shop. You couldn't buy a bag of dog food, and it's trading at 100x multiple, right?
Yeah.
Those things ran up, and people eventually got dizzy. They were like, well, this is blown up. I'm going to take my profit out of there, right? And then the mid caps did the same, and people rotated out of there. And then eventually all they were holding was quality. And so that's how you get this breadth narrowing. But it seems like this time around, it might be the complete inverse. This time around, it almost seems like you're right in the sense that the Mag 7 have run up. We've got Nvidia trading at huge levels. We've got, the other Mag 7 stocks there. Everything is pretty much expensive now. And it seems like we're going to go in the reverse order than what we've seen in 2008 and in 2000 and in the 80s. Like, it seems like we're going in reverse order now, so that breadth may actually widen into this top instead of narrow like it normally does, which is exactly what we observe in crypto. But it will actually be a first, as far as I'm aware at least, for the stock market.
It's an interesting point, and I think you're touching on something that is again very nuanced. So whilst I'm here explaining that we're late stage cycle, this is part of a separate thesis that I'm working on and work in the background, and I won't go into it too deeply here because it's not the time to do it. But I don't think this is necessarily the cycle top which you're talking about, because you're absolutely right. If you look at the late 90s, what you had was a massive concentration in Cisco, in all these internet companies that were supposedly changing the world, and really they just had a very basic website. So I don't think we're at that point yet. So although we are late cycle, I don't believe we're in the late secular cycle. Let's say it that way. This is late cyclical cycle. I do not believe this is the late secular cycle, if that makes sense.
Are you kind of alluding to maybe a push into a high, a decline into some major cycle lows, and then one final major blow off top late decade?
Yes, that's exactly how I see it. And if you look at the S&P with the gold chart, it paints a really clean picture. This is if you're advocating for the end of the cycle, or the secular cycle now, we're going into very, very dark times, like depression times, and I don't think there's justification for that. So I believe we're actually in, we're mid cycle in the secular cycle. So this is just the end of the cyclical cycle, and we'll probably get a really nice opportunity to buy generational entries, in maybe 6 to 12 months on stocks, as they go ballistic into the end of the decade. And I know this ties in nicely with your macro thesis. I know we're very aligned on the macro, kind of how this is going to play out. You're going to get some kind of crisis, which I posit is the yen carry trade. Combine that with deflation, you're going to get a massive credit event later this year, and that's going to cause printer to go insane. You're talking, multitudes higher than COVID, and that's going to really fuel the bubble. So essentially, it will be you play. For me, my approach is play this speculative part of the market over the next few months. Sit back, wait for the credit event, reposition in the market during the credit event once the dust has settled there, because they're going to turn the printer back on, and the inevitable consequence of that is a raging bull market, probably until the end of the decade, before they have to reset the whole system.
Yeah, I absolutely agree. I absolutely agree. Like you said, we are quite aligned there. I think, we can probably see risk rally higher into the end of the year. And then I think, like you said, big credit event, big bear market. Those 4-year cycle lows are due next year. And as a cycle trader, I've traded enough cycles to know that they are going to show up, and there'll be a narrative. And I believe that narrative will be a record amount of QE. And then it's interesting because a lot of what I'm looking at is kind of pointing to, for example, Bitcoin did not left translate in cycle 4 this time around, which tells me, according to cycle theory, it's almost certain to occur in cycle 5, which is next cycle. So I'm seeing a lot of things point towards, like you say, a big run up, a big crash, massive QE and stimulus, and then ultimately some insane bull market that is over and done with in towards the end of the decade. And then from there, I think times might be a little difficult, but I'm not going to pretend like I'm some savant that can see that far
No.
into the future. I struggle enough to kind of call markets in the next few months, let alone, that far out. But yeah, it's good to know we're kind of aligned on that. Have you got any more charts to show us on from this current
Yeah.
slide?
So what we got next? So this was just the flip of the. This is now. I'll just this now moves into the actual trading strategy that I'm developing around this idea. So what I'm looking for is this bottom in the Japanese yen to coincide with a top in risk assets, a local top in risk assets. So this is what I'm waiting for. We've already broken down this week, so I'm really liking what I'm seeing. It's good timing to be here with you today because we got this nice confirmation breaking below these lows, and now I'm going to be. I thought it might move a bit faster and we might get a bottom into the FOMC, but it's probably going to be extended out till next week now. So my strategy is to take advantage of this information and this dynamic because it's very clear to me this is driving the whole market. So essentially, when this is dropping, when the yen is getting weaker, I want to have a risk on position, which is how I'm positioned right now. I'm positioned in Bitcoin, altcoins, and MicroStrategy, etc. So I'm in that risk on position. I'm just waiting now to start seeing a bottom in the yen so that I can take some chips off the table and take my profits because I believe what's coming next is going to be a very big crisis as this yen carry trade really starts to unwind. So this is why I call it the inverse yen carry trade because I'm taking advantage of the yen carry trade, but in reverse, because I know there's going to be a short squeeze on the yen. So I want to position myself long on the yen when everyone thinks the coast is clear, we're all good, Bitcoin's going to the moon, 100%, like everything's great, blue skies. That's when I want to position myself in the yen. So this is what I'm waiting for. I'm waiting for this big move up in Bitcoin to coincide with this move down on the yen, and then I will essentially build I'm gonna do like a leverage long here because it gives me more flexibility on using my margin to hedge. So obviously don't go 100%. I'm not, this is not financial advice because this is an advanced trading strategy. This is not something that people don't even think like this because what I'm about to demonstrate is that I don't want to be over positioned risk on or risk off because I understand the volatility and the danger that's inherent to this part of the cycle. So I want to capture both sides of the move. And this is how I'm developing this trading strategy around that. I don't want to be caught with my pants down, so to speak, because I went 100% into micro strategy and oh, now the yen carry trade is unwinding. Oh, well, what do I do? So this is how I'm trying to kind of educate people on how you can use different asset classes to manage your risk. So I'm using this currency pair to position risk off, and then as I'll show, I'm going to use Bitcoin miners to hedge my risk off position with a risk on position.
Okay, show us how that works.
So the next step, once I've built this long position next week, what I'm expecting is a very strong wave 3 in the yen. So as I've explained, if the yen is increasing versus the dollar, we're going to see a very strong market correction because it's a deleveraging event. This move in the yen is going to cause a deleveraging event. There's just no way around it. We cannot even comprehend how big this yen carry trade is. We just don't even know. It's just layers upon layers of derivative instruments that kind of obfuscate the actual reality. It's not like It's not like seeing all the transactions on Bitcoin. We have no idea the size of this. And it's probably a behemoth. So once I've built my long position, I'm sitting back waiting for the correction. And I'm going to be very happy if that plays out. If there's a correction in markets and there's a risk off move, because I'm capturing what is potentially a very big percentage move. 15% in FX is no joke. So I will not be taking profits here. This is part of the strategy. I will be leaving this so that I'm covering myself for any future risk off moves. So as the yen trends higher, I'm going to capture that move and I'm going to be protected for a market downside. So I'm positioning myself early in this to take full advantage not only of the yen move, but also as I'm kind of hedging myself from the beginning. So I'm going to be selling a lot of my risk assets next week, and I'm going to be positioning myself risk off. So then the second layer comes in of how do I hedge my risk off position with a risk on position. And I just wanted to, this is just a chart on where you can see that this is Mara, the Bitcoin miner, and the US dollar versus the yen. And this is quite a recent, this doesn't look back particularly far, but just to illustrate that generally speaking, if the yen is strengthening, i.e. if the green is going down, the green is the US dollar versus the yen. So if the green is going down, the yen is strengthening. What happens? Deleveraging. What happens? Mara goes down. It's as simple as that. You've got a deleveraging event, Mara goes down. What did we see last August? Deleveraging, Mara goes down. Again, you cannot have a risk on move when there is systemic deleveraging, especially in something like Mara, which is like one of the most speculative assets in the market. You cannot have a risk on move of that magnitude when the yen is strengthening. And you can see that very clearly. The dollar goes up, the green goes up. What happens tomorrow? Oh, look, it forms a bottom and it starts moving up. And that's exactly what we're seeing here. The dollar bottoms, the Mara's a little bit behind, unsurprisingly, given its risk profile. And then they start to move up together. So what I'm planning to do is wait for this correction in the market to really position myself here. So what I'm looking at with Mara here is, as we spoke about, we're looking for a risk on move. This is from last week. So I'm looking for this risk on move. It still looks corrective, Mara, to me. And we've got this overhead resistance with it, the anchored VWAPs from the highs. So I really like this kind of ABC structure into next week to really kind of trap people and make everyone think, oh, we're going to break out, take the highs, and then you'll see the yen strengthen in early July, and that will cause our final what I believe will be our final capitulation before we can actually get some momentum in these Bitcoin miners.
Interesting. So you're going to be kind of long risk via long Mara and hedged via long JPY.
Exactly, but I'm positioned risk off from the beginning, which is kind of funny because we're in the most speculative part of the cycle, and people would probably question me like, why would you not just go long risk, right? Because I'm trying to manage my risk. I can't emphasize this enough. I'm risk off from the beginning. So I'm protected from risk off moves from the beginning. My base case is that I understand this dynamic with the yen, and I'm positioning to take advantage of the deleveraging when it happens. And it also just perfectly fits my system. My system is to buy wave twos, right? Like I'm predominantly Elliott wave, so I buy wave twos. Like that's my setup. So that's what I'm waiting for. And it just so happens that this setup that I'm seeing is perfect for that. So that's why I build a risk off position, and I will use my margin to max out my margin to build the long position in Mara.
Makes sense, brother. Makes sense. Have you got time for a few questions?
Sure.
I want to ask you, right at the start of the episode, you mentioned China being in deflation already.
Yeah.
So my question is, Do you think that's a leading indicator for the US? Because I've long been calling for disinflation to continue at a short period of asset price deflation. Do you agree with that? Is there any light you can shed on that? I would love to know.
Yeah, good question. China tends to export to the world. Like whatever's happening in China really gets exported to the world, you know, like once they came into the World Trade Organization, you know, that deflation was exported to the world where they're making all these goods and everything super cheap. So we cannot underestimate the impact of China. Um, I don't know if I don't honestly I don't know if it leads or lags the US. I'm not sure, but I think the trend is very clear. I think the deflationary trend is going to become very, very clear, and I don't think you can just bazooka your economy with their stimulus and you're going to miraculously get out of that hole. I mean, look at what they done in August last year, September, August last year. That bazooka was completely ineffective, and yields went, you know, they had a huge problem with their 10-year just falling off a cliff. So I don't think you can just print your way out of this like that. And the same goes for America. If we do have this credit event, this deflationary crisis that I anticipate, I don't think you can just bazooka your way out of it and move on like that. I think it becomes less effective the more you do it. So I'm not. So I'm kind of in the camp that it will end up being a protracted crisis of some kind, because I just don't believe you can just print a load of money and everything's kind of hunky dory. But I think the global trend in deflation is very clear. What you're seeing in oil right now is just a spike in oil. It's just a one-off isolated event. The trend will resume. The trend is down. The Fed is behind the curve. I know you're all over this already, as much as I am. Like they are. For me. It's intentional. There's no way they don't know. They're all the resources they have. If I can figure this out, like there's a deflationary trend. Like they 100% know that as well. Whether it's politics, I don't know, or whatever it is, but I think it's very intentional. But this is again kind of a little bit tinfoil hat. If I was the elites, I would want an exit pump before I reset the system. That's basically how markets work, right? Like what we're seeing now is the setup for the exit pump, like in whether it's in Bitcoin or the altcoins or IWM. We're in the middle of an exit pump. Everyone's going to get super euphoric over the next 6 months, and if they hold on to their bags, they'll end up in exit liquidity. And I think that's ultimately where we're going on a bigger secular cycle towards the end of the decade.
Yeah, I agree completely. And I agree completely that this is intentional. Like, they know what they're doing. Like you said, like, if we can see it, they can see it, right? So,
Yeah, think of all the resources they have, and he's coming out and saying that tariffs are inflationary. Like, come on.
yeah, exactly, right? Exactly. Super wild times. I want to ask you a couple more things, right? No, number one, do you have a Bitcoin target for this cycle?
Yeah, so I'm from fib extensions from the last cycle. It's quite broad, probably anything between 250,000 to 300. We'll know a lot more on this next impulse. But yeah, I think my target is around 300,000 for Q4. So the way I anticipate this playing out is we get this very strong risk on move. The macro is perfect right now. The macro is perfect for the next few months for the strongest risk on move, and then probably get a crisis of some kind towards September, October, credit event. Then they at that point the bond yields are way lower. They might even have cut rates by September, October, and then I think they turn the printer back on, and that I really think that's going to be the narrative for the final blow off top into Q4 is going to be. Oh look, they're just starting QE and blah blah blah. But I think that's a massive bull trap. I think, like I say, the idea that they're just going to print a load of money and we're going to walk away from this credit event like with just a few scratches is a fantasy in my opinion. Like when you understand this deflationary trend and this deleveraging that's happening in the yen, like if you combine those two things, that is a huge crisis on the horizon, in my opinion.
And what about Altseason? For a long time, I've been saying no broad-based Altseason. I think a handful will do extremely well, and the majority of them are not gonna perform. Do you agree? Do you disagree? Love to hear your thoughts.
It's a really nuanced point this cycle because it's not this situation where Bitcoin goes up a little bit, Bitcoin dominance goes up a little bit, and then it just collapses. I don't think we're at that point yet. The macro is not there. You need the macro for the what we call as the true alt season, where everything basically goes 100x for no reason. Like that's the true alt season where everything gets super irrational, right? And we're 100% not there yet. But what you're going to see, in my opinion, is you don't necessarily need that to make money on the altcoins. Like over the next few months, the macro is its strongest. You're probably going to get a really strong move in Ethereum, and the majority. My idea is that the majority of altcoins will top over the next few months because Ethereum will top alongside IWM and the small caps, and the macro is very supportive over the next few months for a very strong risk on move. But the kind of typical season, like I say, where everything gets really silly, I don't think that's going to be until later in the year when because Bitcoin structure is much stronger this time. It's built a much healthier structure. That's why everyone's getting so frustrated with the altcoins because Bitcoin's not just going parabolic for and going like hockey stick up. It's actually building, it's stair stepping, and it's built a really healthy structure. So um, I kind of see a situation where Bitcoin dominance hasn't even topped yet. I believe it's topped now, short term, and we're going to get a really big move in altcoins over the next few months. But my idea is that the credit event comes in kind of October, September, October, and you'll see dominance spike back up to 70%. Altcoins get wiped out, and then you probably get that final euphoric nonsense move in all the altcoins. But to be honest, I'll be out of the market by then. There's no way I'm holding into a potential credit event because of some potential QE. Like I'm going to be over the next few months. I'm going to be reducing my exposure on all risk assets personally.
Makes sense. Makes sense. I want to throw you a curveball now because based on what I've seen on Twitter, you're quite a spiritual person. So I was hoping to end on maybe a little bit of spiritual insight. I know
Yeah, do it.
I know my following are really into this kind of stuff. There's a lot of demand for it. So I want to ask you, I guess first of all, do you consider yourself to be a spiritual person? And if so, why?
It's a very loaded word, spiritual now, isn't it? It's a very
Yep.
loaded spirituality in itself is kind of a loaded term. So for me, it's just being natural. Would prefer that word, like the nature of being human has a spiritual element. There's things we can't explain with our eyes and our mind. There are forces, whether you want to call it forces, dimensions, spirits, whatever word you want to use. There is much more to our reality that meets the eye. And it's not really until you go into forms of spirituality, for want of a better word, whether it's meditation, psychedelics, breath work, yoga, whatever it is you enjoy. It's not really until you go into those mediums that you start to open to the esoteric side of the world. And I'm at a point now, it's funny you asked this question because I'm at a point now where the esoteric is just completely normalized for me. Things that I observe in my life, people would think I'm crazy because I see things in a very meaningful way. And I think that's a beautiful thing to be able to see messages and significance in every little thing that happens. I think that's beautiful. That's just natural for me now. It's not like I'm looking for those things to give my life purpose. On the contrary, I'm connected to my being in a broader sense of being not this sort of personality we call Sonny. I'm I like to think I'm connected to something deeper, and I'm allowing this process to just unfold naturally. And that's kind of how I live my life. I just try and live life as naturally as possible. And it's been funny. Like I've got some nice compliments online because they tell me like you're really crass and you swear a lot for someone who's so-called spiritual, and I like it because and I really like that because like I want to be real, and that's why spirituality is a loaded word, is because people forget how to be real, and that's why I'm on X with all the trolls, because like that's life. Like I accept life in all its forms, the good, the bad, the ugly, the beautiful, and I'm not trying to be spiritual. That's the toxic side of it. I'm not trying to be anything. In fact, I've completely let go of trying to be Sonny. For me, Sonny is just this meat suit that I wear and this way I navigate this world. So I'm not trying to be spiritual. That's just a natural part of being, is the spiritual aspect of that's inherent in being itself.
I think you're absolutely right about the spiritual being a loaded term. I remember fairly recently watching an interview of an OnlyFans model, and somebody asked her if she was spiritual. She's like, "Yeah, I'm a super spiritual person. This, and this." I was immediately thinking,
Red flag.
"Yeah,
Red
yeah,
flag.
exactly." but yeah, I kind of for a long time have subscribed to the idea that we are some kind of some souls that are passing through a construct. And for me, at least, this whole thing seems to be about figuring out. It's like a weird paradox. Like you come here not knowing who you are, tasked with maybe remembering who you really are, and then each of us get a gift, and our highest expression of soul is to kind of share that gift with the world. That's what it seems to me. I don't know what you think about that. I would love to know a little bit more about meditation. Meditation is something I've always struggled with, but I believe you're the practitioner of that. So if you have any insight to share, I'd love to know about that.
Absolutely. It's a beautiful dance we do in this world, and it's a very bizarre experience to live in this duality of this illusion of separation. And I think that's why meditation is so powerful, because it really dispels this illusion of separation of me versus you, or them versus us. Like meditation is just a process in which you discover the true nature of reality by deleting all the nonsense that you've been led to believe. That's all it is. It's actually a negative process, not as in a bad process, but you're negating all of the conditioning. That's all it is. It's just deconditioning. Enlightenment is just another word for deconditioning. And as a trader, you actually tap into that because you realize all your judgments and all your beliefs are guiding the and shaping the decisions you make. You're not making those decisions. You're shaped by your conditioning, whether mummy told you this, daddy told you that, or school teacher told you this, whatever it might be. Those belief systems, just like in trading, just like in meditation, just like in many forms of life, you're challenging those forms of identity. So that's what I've found in my own meditation practice. I practice a technique called Vipassana, which is um, you kind of dive into the deep end of Vipassana, in that you have to do a 10-day silent retreat to learn the full technique. So that's a very challenging aspect, which requires, not everyone's available for 10 days to do that. But I'm very fortunate that I committed to that path. And it just it just opened up something inside of me that is like a calling, really. It just felt supernatural to go more deeply into that, because the benefits that you start to see is really powerful. It changed my life completely. It changed my personality completely, because I started to dissolve this concept of who I am. Because basically, with the way I understand it, is through all of these experiences, we build a personality based on who we think we are. But it's a construct. You're not that person. I am not this defined thing, and you see it throughout everyone. Like, look at, I love to use Bitcoin maxis as an example, because like that's an identification, that's an identity structure. You're way bigger and more beautiful than a Bitcoiner. Like that's such a limited view of who you are as a being. So I try to not fall into any kind of process of attaching my identity to anything. Like, so that's why, like, on my X profile I say like I'm a student of. I'm a student of Bitcoin. I'm a student of Vipassana. Because I could do the same thing with Vipassana. I could make it my identity. Be like, yeah, I'm a meditator and I'm a Vipassana student and blah 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 blah. I'm spiritual. Look at me. But that's the trap. That's the trap. Is the reinforcing identity that causes conflict in the world. So that's what I just try not to do. I try not to identify as anything, trader, whatever it is. Like, don't fall into that trap. Just be free from it all. Just try and surrender to it all and detach from it all, and you'll find that makes you a more loving person, in my experience.
Yeah, I totally agree, to be completely honest. I think it's very easy. I think you ask people who they are, and they'll say things like, "Oh, I'm Camel, I'm a trader, I'm
Right.
55, whatever, from London." And all of that stuff can be changed, right? I can change my job and I'm no longer a trader. I can change my name by default, right? I can
Exactly.
change my
It's really
location, and every minute of every day I get a little bit older, right? So it's like it's all kind of a totally false construct. And it's funny because the more time you kind of spend thinking about it and just being present in the moment without the distractions, the more you kind of realize that you're more than most of us are more than we suppose ourselves to be, right? and
100%.
and that's where the true power comes from. That's where the true freedom comes from. I want to ask you a couple more questions. So, number one, do you believe our thoughts can influence or interface or create our reality? That's something that I personally have experienced, and the more I've kind of messed around with this, the more I've kind of paid attention to it, the more I've kind of honed my mind to think as positively as possible and not dwell on past things or traumas or negativity, the more I've kind of found that this is almost like a muscle that you can exercise. So I would love to know
Right.
if you've experienced this. I've even gotten to the stage now where if I find myself daydreaming something negative, I almost get scared. I'm like, oh no, I'm about to get myself in this sticky situation I don't want to be in. So is that something you resonate with? I'd love to know.
Yeah, the power of thoughts is real. And that's why I enjoy meditation, because it just creates more silence. So the more silence we can create, the easier it becomes to kind of be more harmonious and listen, because the chatter from the mind is super destructive, really, really destructive. Um, and the way I understand it is you're essentially projecting meaning into the world through your own image. So when you're, for example, like when you're when you're talking to someone, you are not in relationship to that person. You are projecting an image onto that person, and you're in relationship with the image, not the real person. So, for example, you're talking to your mum. You're not talking to your mum. You're talking to the image you have of your mum. It's not really a direct relationship with the being itself, because of the conditioning, because of the identity. And we do it the same with us, right? Like, everyone has awareness of how they're being perceived. So you do the same to yourself. You create your own image, which is a thought form that doesn't exist except for in your mind. Like, when people freak out about, like, oh, I don't want to be seen like that, like they defend themselves because someone's seen them do something and they don't want to let on that they're like that to that person. Like, what are you doing? You're creating a mental construct, and you'll find, if you go deeply into this, you do that with everything, with your personality online, with your mom, with your partner. And it takes a lot of deconditioning to get to the point where you're free, just being nobody. That's all meditation is really just dying completely. Is just becoming nobody. And I try to practice it. I try to use X to practice that. Like, I've had altercations with other analysts. They called me names. They said I'm shit, whatever. Um, I just try to be like, okay, that's cool. Like, I don't need to defend myself against you, because that's a game of mentality. It's a game of thoughts. There's nothing to defend. There's nothing. I don't need to project some image of myself. I'm just being me. And if people don't like that, that's okay. Like, that's the point I'm at, and I feel very blessed to have arrived at that point, because life is a lot less stressful. I don't need to defend myself to anyone anymore, and I don't just mean that on X. I would be the same with my mum. If my mum criticised me, I'd be like, okay, I'm just living my life. Like, this is just me. If that's not cool with you, I know in my heart I'm a good person. I'm trying to do my best. If that's not enough for you, that's okay. Like I accept that. So I just, yeah, I think you're absolutely right. You just got to be very conscious of your thoughts and not kind of get involved in these silly games we play of defending our thoughts. That's all you're doing is you're defending your image, you're defending your thoughts, and all of that is a creation of identity. So once the identity falls away, it kind of reverse engineers the problem. If I don't have an identity, what is there to defend?
Yeah, extremely well said. I've fallen into this trap myself, to be honest, and I'm almost ashamed to say that it took me a lot longer than I would have liked, because I've been doing YouTube for, I think, about 3 years and 3 months, and it probably took me nearly 3 years before I finally realized, like, I don't have to answer to these people, right? Like, I was
I
getting
don't even
trolled.
know these people.
Yeah, I'm getting trolled online. People are paraphrasing stuff, and for a lot longer than I honestly would like to admit, I was like, no, 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 I didn't say that. I said this, or like, no, 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 like you've taken this out of context, blah blah blah.
Right.
And it took me a long time before I finally realized, like, well, I don't have to defend anything, right? I can post my stuff, and you resonate with it or you don't, and
That's it.
it's really not that deep. I do want to ask you, can you shed some light on? I saw a Twitter post from you about health in general and disease and not believing in disease. This is something
Oh yeah.
I've personally been messing around with this for the best part of my life, despite being quite fit and active and going to the gym often and all this kind of thing. I've suffered with asthma for a long time, and
Okay.
it only recently occurred to me that I'm choosing to suffer with asthma, right? Like
Absolutely.
there's really no rhyme or reason for me to have asthma, and I think I have kind of been conditioned from childhood, and then later in life I've been smoking a lot, blah blah blah. And it only recently occurred to me that I can just let this go, right? And I don't have to choose to have asthma. And
Yeah.
so I've been working with that, and ever since I've been working with this, and ever since I've been spending some time to get through this, my asthma has almost vanished, almost completely
Amazing.
vanished. And I saw a post from you about how you don't really believe in disease, right? Or like
Yeah.
at least your perspective on disease is that the body doesn't misfunction or malfunction; it merely alerts you to the fact that something is off. So
Yeah.
I would love to hear any thoughts you have on that.
Great question. And this is probably controversial for most people because we're so indoctrinated and so, I mean, even think about the word indoctrinated, the word doctor's almost there, right? So um, we're so conditioned to believe that these people in white coats can save us, and it's a madness. It's a complete madness. Don't get me wrong, there is value in healthcare services, emergencies, etc. Break your arm, I'm going to go to the doctor. I'm not an idiot. But my perspective started to really change when I became healthy. Basically, during the pandemic, I went in my soul searching mission and I went and lived in a Vipassana center for 3 months. So I was basically living like a monk for 3 months, meditating several hours a day, long courses, like extended periods of silence. Like I went all in. And when I came out, it was amazing. Like the things that changed in my body were just incredible. Like one thing that blew my mind was that I didn't get burnt by the sun anymore. I was out in Poland in the sun, boiling hot. It was like 30 degrees. I was working outside, and if I had been in the sun in that condition before, and I used to smoke, I used to party before that. So this was a really like clean period after I went into meditation where I stopped everything. I stopped getting burned by the sun anymore. And this was kind of like these little things start happening where you realize like you create your own sickness in that like the toxins weren't in my body to create the sunburn. That's the way I understand it. And then I started to realize, well, okay, like if I was getting burnt because of my own lifestyle choices, not because the sun's strong, I don't need to use sun cream anymore. My mum still gets very angry at me because I don't use sunscreen, and I live in Mexico. and I'm out in the sun all the time. And it's not because I do some yoga technique where I'm channeling prana or whatever. It's because I just don't get burned because I don't put toxins in my body. So that really started me on this journey where I'm like, okay, and I stopped getting sick. I don't get sick. And it got to the point where when I do get sick, the meaning and the purpose and the message that my body is trying to communicate with me is very obvious. It's like, oh, that's connected to this psychological complex. That's the point I got to where a couple of years ago I got shingles and I didn't know what it was. And I was actually in the Vipassana center at the time, and I was volunteering. So I'm working very hard. I'm working, long days in the kitchen, and I got shingles, and I didn't know what it was. I'd never seen that before. And I turned to my roommate and asked him, and he told me what that was, and I use this as an example to explain how I respond to so-called dis-ease. Dis-ease, it's disequilibrium. So most people, when they get sickness, they're like, oh, I need to go to the doctor immediately. This is bad, right? I need to fix this. I need to fix this problem. That mentality is wrong, in my opinion. So my approach, I had this sickness, and I asked my roommate what this is. He told me, and lo and behold, the beauty of this situation, he knew. He suggested how to heal this without doctors, without any medicine. He said, all you need to do is just take zinc. Just take some zinc, and you'll be fine. So what my response is when I get sick, what I do is I listen. This is going to sound a bit crazy, but I listen. I don't react. I don't go, I need to go to the doctor. I need to get a prescription. I need to solve this problem. I don't react. I was sick relatively recently, and my partner's family is saying, you need to go to the doctor. And I'm like, I'm good. I'm going to enjoy my sickness. Thank you. I'm going to stay in bed. I'm going to rest, and I'm going to let it pass through me. So my response is to listen. And in that specific situation where I got shingles, I took zinc. I was in a Vipassana center, so I'm meditating a lot anyway. And within a week, it was gone. Most people, when they get shingles, my mum's partner, when he got shingles, went and got antiviral drugs. Then the antiviral drugs caused another sickness, and he had shingles for 8 weeks. How can you have someone get shingles and develop complications and have all these problems in 8 weeks? He's not a particularly healthy person. That doesn't help. And then I get it, and I healed it with zinc in a week. Do you see what I'm trying to explain? Like your whole mentality needs to change. It's not about fix this problem. I have this because there's another form of identification. So I need to take this drug to fix this problem. Just listen to your body. The body's going to tell you where the imbalance is, and you're going to manifest that in your environment, whether it's help through this person, whether it's help through this thing that you read, whatever it is, that's going to guide you and take responsibility for your own healing process. So it's really cool that you've gone through that process naturally of being like, I'm going to connect with this. I'm going to connect with this so-called sickness, disease, whatever we want to call it. But I'm going to connect with it as a form of dialogue, as a communication. And maybe through that process, through that journey, I will arrive at a point where I see how I may have created this imbalance in my mind, in my body. They're both are connected. You can't separate the two. So you can just it's just a mentality thing. So now I get sick and I'm like, okay, cool. Let's let's see what happens, Let's if I need to rest, I need to rest. You know, if I can't do certain things because I've got this sickness, that's okay. Don't react to it. Don't be so quick to go to the doctor to solve this problem because there is no problem. The idea of a problem reinforces the problem. It makes it worse. Then you start identifying with it. Then you're on medication that causes side effects. I won't go too deep on the whole medical industry, but let's just say I don't have a particularly positive view on it. Um, Same with COVID. I never got COVID. And I was traveling all over the world during the pandemic. I never got sick, and it's because I take responsibility in my health. This is the precursor to this mentality is to take responsibility for your health. If you know you've got a healthy lifestyle, then you can have a good element of trust that when you get sick, it's meaningful. you haven't created that. I know I take care of my body. So when I get sick, I'm like, okay, there's probably some kind of thing, energy, whatever you want to call it, that I need to process. And through that process, it just moves through you and you don't get stuck with that sickness. You don't get stuck with that energy. That's kind of how I feel like with you and the asthma. It's like you had some kind of process that energy wasn't got trapped inside of you. And now you're in the process of releasing that energy, and that will just happen in your own time and your own process, and you have to respect your own process. People don't want to be sick, but that's ridiculous. We're humans, we're going to die and we're going to get sick. Like, what are you're going to fight nature? Good luck with that. That's not a battle you're going to win.
Yeah, for sure, for sure. I had a very strange experience with this. This all started so many years ago. I used to get hay fever and allergies if I was in the room. Even though I'm a dog lover and I've always been okay around my own dogs, but I always used to get really allergic reactions to dogs. I always used to get hay fever every year, and I could never really figure it out. And then I married my wife, or I started dating my wife. We didn't marry until much later in our relationship, but started dating my wife. Anyway, my wife, who is a nurse, she's been around hospitals her whole life. It was her that this started to, being with my wife made me realize that attitude and mentality has a lot to do with your health, right? Because I would always tell the story that my immune system is weak. I get hay fever. I'm allergic to dogs. I'm allergic to cats, right? Any time that I would come
Don't
into
come near me. Like, oh no.
yeah, anytime I would come into contact with people, I'd be like, yeah, I'm snotty again, and yeah, my eyes are itching. It's because I got hay fever. It's because my immune system is weak, blah, blah. And then I watch my wife, and my wife does not respect sickness at all, right? I've never known another human being like it. She will happily see someone dying of plague and she'll walk over there and care for this person. And she's like, I'm not going to get sick, right? Like, there is not even a small sliver of doubt in her mind that illness can affect her. And for years, I always used to think, wow, like my wife's got this immune system that it needs to be studied. Like, it's so strong, blah, blah, blah. But after a while, I realized her mentality is just that I can't get sick because I choose not to get sick, right? As a nurse, she goes into the hospital, she sees sick people all the time. She worked in A&E during the pandemic, and
Right.
she would come home and be like, yeah, so all these patients, blah, blah, blah. And I'm like, oh, aren't you scared about COVID? She'd be like, nope, I'm not going to get it. She just doesn't respect it. And somehow that I observed over the years of living with her that this puts up some kind of shield. Like, it just prevents her vibrating on whatever level that allows her to absorb this sickness. And then after kind of observing this, I realized that I had been walking around telling everyone, oh, I suffer from hay fever. Oh, I suffer from being allergic to dogs, blah, blah, blah. So I started to change that story. And instead of walk around telling everyone that I suffer with these things, I started to say, I used to suffer with hay fever. I used to suffer, right? And what I noticed was within about 6 months, boom, gone. Completely gone, right? And this has stuck with me forever because I was like, holy shit, like I'm actually choosing to have these ailments, right? And it's like quite a difficult conversation because I think a lot of
100%.
people don't want to accept that you are choosing that kind of vibration, right?
People don't want to take that responsibility for a starter. Like that's a lot of responsibility you have to take, right? Like, if you've got a chronic illness and you may have created that, that's people are not prepared for that. Like, it's much easier to go to the doctor and say, that's your problem. That's not my problem. I'm going to outsource my problem to you. Thank you very much. Like, it's a psychological thing. It's the fear of really going inside. But what you'll realize is that, like you say, like you created that. So that means that sickness is inside of you. Think about that. Like, sickness is inside of you already. You're not coming into contact with someone and making you sick. No, it's resonance. You have something inside of you, and then you meet the outside world, and that resonates with you. And we saw that in COVID, right? Like, that was a perfect example of that. People making
Yep.
themselves sick. My dad psychologically gave himself COVID. I watched it happen. It was the wildest thing in the world. He wasn't sick, but his mind created sickness. It was the perfect experiment for exactly what we're talking about, and it's so crazy to think that these things exist already inside of you, but that's the reality. And then you just resonate with people. Like, how, like you say, how is it that you can be next to a sick person? And I do the same with my partner. Like, when I first met her, she was sick, and we're in bed and I'm looking after her and whatever. And she's like, "You're not worried?" And I'm like, "No, I'm not going to get sick. I'll take care of myself. I'm good." And I was like that throughout COVID. And it's the power of belief. And once people realize that their beliefs shape reality, wow, that's when everything changes.
Yeah, for sure. And it's also, in my experience at least, that a lot of people frame it as, oh, my body's not working, that's why I'm sick. But actually, your
Mhm.
body is working fine all the time, right? Like, if you start to experience an ailment, or you start to get a bit under the weather, like, that's your body letting you know, almost like a smoke detector. Like, oh,
Exactly.
by the way, something's out of alignment here. You need to
Yeah.
do the inner work, and then we can fix the ailment. So it's like
Yeah.
it's a
Look
very
over
weird,
here.
it's a different way to frame the whole thing. But Sonny, this has been a fantastic conversation. I'm conscious of time because I planned for an hour. We're closing, we're closing in on 2 hours. Um,
Wow. Awesome.
yeah, I've had a fantastic time talking with you. I want to
Me too,
end.
brother.
I want to end by asking you, what's your best estimate of God? Are you a subscriber to organized religion? Do you think there is a God? Do you think there isn't a God? Do you think it's more of a universal energy? Do you see none of these things? I would love to get your perspective on that, and hopefully then we can give you a shout out, tell people where they can find you, and hopefully they made it this far.
Awesome. Yeah, loving the questions. God is similarly a charged word, right? Like spirituality. So for me, it's I've gone very deep into the Buddha's work and the Buddha's teachings, and in Buddhist philosophy, there is no conceptualization of God. Um, but they have different words for the same thing. It would be called Dharma, which translates to nature. And I quite like that. I quite like the law of nature. This is just, there is something that permeates all being. That is that is without doubt for me in my own personal experience, not because of some intellectual thing that I've read, but because I've come into contact with the force of nature. Let's call it that, force of nature. So I would call it something like that, rather than this personification of whatever a god might be in someone's mind. Um, there is just a oneness to everything, and that's why we're all connected, and that's really the basis of love. That's why, for me, God is synonymous with love. That is, love is life, love is connection, um, and big part of love is just accepting life. That's really the game. That's the whole game we're here to discover: is, can you accept life with all the challenges, with all the pain, with all the craziness, with all your own personal stuff on top of that? Can you accept fully what it means to be human? That is the epitome of love, in my opinion. And if you can embody that love, you are God. Not in an egotistical way. You are embodying the principle of love, which is the principle of God. That's why we're here, is to remember, reconnect to that truth.
This has been a fantastic conversation. I can't wait to listen to it back, to be honest, because when I listen to it back, I often get a completely different perspective to when I'm sort of like live in the
Yeah.
conversation. Sonny, thank you for your time. This has been a
Thank
fantastic
you, sir.
conversation.
Been a pleasure.
Do you want to? Can you let people know? I'll put links to your Twitter and stuff, and your slice and that kind of
Yeah,
thing
great.
in the description and the comments. But do you want to give yourself a shout out and let people know where they can find you and that kind of thing?
Yeah, sure. So Sunny Jim 22 on Twitter X. I just started my publication. You'll find the links in my bio for Sunny Side Up on Substack. So I've just started that. I'm going to release the second publication today. That's going to be a part two of the Japanese yen carry trade, and applying that to crypto. So if you want to dive into that a little bit more, check out the Substack. Um, And yeah, I think that's everything. Really, really had a lot of fun today catching up, and yeah, good to hang out.
Thank you for your time, Sonny. This has been a blast for me. Yeah, you seem like a really awesome guy, to be honest. So yeah,
Oh, thank you,
if
brother.
you ever want to run it back, maybe we can meet up again in a few months' time, and we'll see how things
Be
have
nice to
progressed.
check in, maybe. Yeah, after this is all kind of played out, we're starting to get some nice confirmations at the moment. So yeah, we could definitely be a. Would love to check back in, and hopefully a few less people on X are calling me a retard by then.
I mean, one thing's for sure, right? People are always going to be the way they are. It
Yeah,
is what it is. But honestly,
yeah.
man, thank you again for your time. I really, really appreciate it. And I'll put all the links to your stuff in the
Likewise.
description. And hopefully we'll speak again soon.
Awesome. Thanks, brother.
Okay, all the best. Take care. Cheers. Bye.